The greenback has had a rough couple of months. After surging in February on the back of a flight to safety triggered by the COVID-19 pandemic, the US dollar has fallen 4.3% in the 4 months ending in August and shows no signs of stopping. But analysts say it is unwise to count the dollar out.
So we've seen this, after the dot-com recession, after the GFC. But I think if you look very closely at those past episodes, this correction does not go on indefinitely. In fact, the dollar, after about 6 to 12 months, bottoms actually turns back up as well.
But with the US presidential elections just around the corner, it looks likely that the medium term will remain volatile.
In terms of the US election risks, I think, again, the market has been a bit complacent around this. When we look a bit around the volatility pricing and whether the risk premium suggests that we could get a protracted and more contested election, that hasn't quite materialized yet. But I think as we draw closer, I think the market will start to price in that risk premium more clearly. That should favor the US dollar.
Some have warned that a weakening US dollar could have an impact on its status as the world's reserve currency. In fact, the fraction of global reserves denominated in dollars has been inching down for the last few years, but analysts are not overly concerned.
The case of dollar debasement is overdone. There's no real evidence sign of inflation going on. Also, when we look at the current account deficit side of things, the US current account deficit is about 1.5% of GDP for this year, narrower than it has been in previous dollar down cycles. The US is a net debtor of about 55% of GDP, so it's accumulated a lot of debt. But again, I think the reserve status is still holding, it's still been quite evident, although there has been some erosion to the dollar status.
The other reason that the US will remain the reserve currency is that no other currency is in a position to replace it.
Since the early 2000s, the euro did emerge as an alternative reserve currency. And for a while, it did seem like a viable one. But since 2005 onwards, right, the currency has constantly been plagued by the threat of the unraveling of the common currency because of internal disputes. So I think in that respect, the dollar still retains its primacy. And in addition, the yuan has emerged over the last couple of years as another viable reserve currency. But the internationalization of the yuan, I don't think is there yet. But what we are probably going to see is a diversification amongst reserve managers, right, from the dollar, right, to these few other alternative reserve currencies over the next few years.
All analysts agree that Asian currencies will benefit from the weak US dollar in the next few months.
Asian currencies, as they always do during the recovery from a global recession, been slow to capitalize on the weak dollar. We should be seeing a floor for most of the dollar Asian currencies as well. But I think within the Asian currencies, there was some focus, let's say, on the Indonesian rupiah, because in July, when the dollar was falling across the board, I think the rupiah was going the other way. So I'm really looking at something between 14,000 and 15,000 for the rupiah, for the rest of this year.
Another currency that investors should watch is the Chinese yuan.
China will be one of only a handful of countries in the global economy that will post positive return this year, positive economic growth this year. We're expecting China growth to be at least 2% growth this year. And in many senses, it's creating a reflation story. So we're looking at Northeast Asia, Taiwan dollar, Korean won outperforming. So in many respects, Northeast Asia is doing better than Southeast Asia and South Asia.
The Singapore dollar could also benefit from this trickle-down effect.
I do think that Singapore dollar is in a sweet spot right now. Amidst all the geopolitical tensions that are ongoing, right, between US and China, the fact of the matter is that Singapore offers a very safe as well as conducive place to conduct its businesses. I think arising from the disputes, right, surrounding Hong Kong's autonomy from China because of the introduction of the new national security laws by China, a lot of investment flows are potentially being diverted to Singapore. And arising from this ongoing dispute between US and China on Chinese tech companies and the security of data, right? A lot of Chinese-based internet giants, the likes of Tencent as well as ByteDance, right, have decided to actually relocate some of their important businesses, right, into Singapore as well.